it's my year, yeah.
All right, good morning. Wake up, everybody. Welcome to the morning show here on Stock Market TV. I am Spencer Israel, joined once again, as always, by Steve Strazza. JC Parets, for some reason, is still in the Windy City. Not really sure why. It's like almost winter. He's probably cold, but regardless, he'll be back tomorrow. We got a lot to talk about today, though, as Curtis Taylor says in the chat. Happy CPI day. CPI just out a couple minutes ago. We're not going to talk about that just yet. We'll wait. We'll bring on John Netto at like 8:45. He will talk about CPI. He will give us his thoughts on that report. I'll be honest, I hadn't even seen it yet, and it was out 2 minutes ago. So we'll let Netto take care of that. Great guest today, Julius De Kempenaer, the founder of Relative Rotation Graphs. He'll be on at 8:50, and he's got charts of his own. I've always liked RRG charts. I think that I'm a very visual person, and I like how they tell a story. So he'll have a few charts for us. Then we'll have Kimmy Sokoloff, as always. It's Thursdays, so Sean McLaughlin will be on the show. And how about those tech stocks, right? They keep on keeping on. We got some earnings. Oh, I didn't even mention that. We got some earnings. Yeah, that's right. We got some Domino's. We got some Fastenal, got some Delta Airlines, got some Walgreens. I don't really care about Walgreens, right? But the other ones are interesting. Anyway, that's the rundown for the day. Hope everyone's having a good morning so far. Do me a solid. Drop the like button. Steve is literally pumping his fists right now. I'm not really sure why. So let's go. Let's go. Come on.
You told me you were feeling low energy, so that's what I do.
Oh yeah.
Myself.
All right, that's good.
You know?
Yeah, I don't know what's wrong with me today. Maybe I just woke up on the wrong side of the bed. I don't know.
No, we'll get you there.
Okay.
Within the next hour and a half, your energy is going to.
No, I'm good. I'm always good to power through. So, yeah, I don't know. Maybe just you know what it was? I took some melatonin last night. That always gives me a bit of a hangover in the morning. But anyway, we got a lot to discuss here. So we'll have Neto on in 10. We'll have Julius De Kempenaer on in 15. So let's get right to it. Should we get some charts up?
No, first I have a public service announcement. So there's been some confusion, and for good reason. It's my fault. So I've been talking about how we're getting this year-end ripper for the past week now, and I haven't worn my bull market shirt not one time. So Hot Corner live session yesterday. Somebody in the chat was like, "What's going on here? I thought you're bullish. I haven't seen a bull market shirt in such a long time." He's right. It is a bull market. I think we're legging up here. So get your bull market shirts out of the closet. Get them ready to go. Get them ironed. It's that time.
It's that time. All right. Let's talk about it. Let's talk about it.
We got some charts here.
Where are my charts?
I haven't had a chance. I know we got dollar charts. Hold on.
Here they are. There's one. Hey.
So how do I know this chart is important right now? I'll tell you how. The 3 different members from our analyst team or from All Star Charts wrote about the dollar yesterday. Actually, we held one post back because I was just like $3 post in one day. I don't know, guys. So there's another one coming today. But all 3 of these guys, Ian, Fonz, JC, they're all out here writing about the dollar. Why it's super important, right? And it's not this one. It's zoom in and show me one of Ian's. Show me the zoomed in base. Yeah, look at this, right? So take it back to the left-hand side of the chart. Where were we? Stocks were making their ultimate cycle low, right? When the dollar peaked last fall. Got a really nice drawdown. Dollar just steadily fell through middle of the first quarter of this year, right? Got a dead cat bounce, which gave us a clear level here to define our base at in March, right around 105, and it's about 105.50, call it, right?
Mm-hmm.
Above that level, this is a completed base, and you would have to think, okay, the path of least resistance is now again higher in the dollar, and start talking about those old highs again. And And really, in that environment, we would expect risk assets to come under increased pressure, right? And correlation has been so tight. The post that'll be up on the blog today kind of really drills into just since the dollar peaked, a week or two ago. No, I don't know if we have it. It's the short. There it is, right? So this is just about a week or two ago. Dollar peaks and rolls over. It's had about 5 or 6 straight sessions in the red now, and look at what stocks have been able to do, right? So this relationship is so important. We can't stress just how important the dollar is for risk assets, particularly stocks, from an intermarket standpoint. Couple of big levels here. Back to the short-term chart. Yeah. 105.50, if that goes, that is a big one, right? And that would be the first step. But I really think you need confirmation, because as big as this 105.50 level is, when we zoom out, now funds give the zoomed out structure. Yeah. So we got the 2017 and the 2020 or COVID highs here coming in 103, 104. 105.50 is not enough. That puts you back in the box a little bit, kind of undoes the shorter term reversal. But you really want to see the dollar fall back into this old range, right? This almost decade long range at this point. I don't think that really happens until about 103, 103.50. So let's be patient with it. But as long as we're in this 103 to 105 zone, I think it's going to be choppy and messy. And I don't think we have, clear instruction from the market on what the future direction will be, right? So that's kind of how we're viewing it long term. Next chart.
Well, if we fall to 103, that means we've fallen. That means surely stocks have gone up, right? So
you would think, one would think, definitely.
Yeah. So
I'm just saying, and 2 points is kind of a decent sized move.
Yeah, that's what I'm saying. Don't just wait for 103 here. I mean, we're at 105, so
I'm not waiting for anything.
Yeah, all right.
No, I haven't been waiting, but I do think it gets a lot easier to make money in and through the fourth quarter with a dollar below 103. I think, if we're between 105 and 103, look out for some shakes and some whipsaws and maybe some false starts. I think on a clear violation of 103, we can all maybe take a deep breath. At least us bulls, we could take a deep breath and say, okay, the dollar is again a tailwind, right? Like it was in Q4 of last year and Q1 of this year. And that would obviously be a big deal. Mm-hmm. So yeah, that's it. Just dollar today. It's that important. Go check out the blog. 3 posts.
It's it's everything. Do we have any charts of anything techie? Because as the dollar keeps falling, tech keeps rising.
Do we have anything techie? What kind of techie? What are you looking for here?
I don't know. There's a bit of a disagreement on the analyst call yesterday. I wanted to go for like the junkier tech. Maybe you were kind of on my side. JC was definitely not on my side.
I had your back.
Yeah. You sort of did. Yeah. I was going like for like junkier tech, like ARC stocks. And JC was not about that life. But look, the ones that have gotten punished the hardest tend to make the most violent moves. So
let's talk about this point exactly. This is something I kind of wrestle with during every little bull run, right? So what Spencer is saying is, okay, presuming what you crazy analysts say is true, right? Presuming we do leg higher into year end, have a nice little rally on our hands here. How do we play it? Typically, our answer as good technicians would be you buy the strongest stocks. Buy the leaders, right? What Spencer is saying is, have you ever heard of a dead cat bounce, right? You get these monster counter trend moves, mean reversion moves, right? Coming off of really extreme or overdone or stretched trends. So Spencer's saying, why don't we buy Square? Why don't we buy JD.com? Buy the worst looking ones looking for a bounce. I think yes, you do. And the way that I've always treated this question is you do a little bit of both, right? You buy the leaders. Those are the easier.
That's probably the way to do it, honestly. Is just
you do a little bit of both, right? You buy the leaders. You want to be in NVIDIA and Broadcom, Avago, and all the mega cap techs, right? Google, Meta right now, you'd be crazy not to. But maybe this bounce gets them 20, 30%, and some beat up speculative ARC stock might do 40 or 50% on that move, right?
I'm saying why shouldn't I buy Teladoc right now, right? I've got 18 as an out, all right? We're at 19 and a half this morning.
Yeah.
I'm just saying.
and you just made another great point, right? If you are, so these are harder trades to make, buying the laggards, buying the junky stuff. They have a lower probability of success, right? Some of these trends could just simply keep trending in the direction that they're already trending in, unlike something like Google or Meta, where we have a very strong underlying uptrend at our backs, right? But if you do catch one of these tradable lows and one of these junky stocks, they're going to move a lot. That's going to give you the most beta or the most juice. So I think you do both. But Spencer, you just said know where you're out, right? Don't just buy these things blindly. You have to keep really, really tight.
One hole in the chat saying I want to squeeze the shorts. I don't care if it's a short squeeze or not. It's not important to me to squeeze the shorts or anything. It's not,
No.
Yeah, that's not the point. I don't care. I'm just, my point is that, the ones that get beaten down the most can also rip the most, right? So dead cat bounces. Yeah, that's my point. It's not.
But a high short interest could be a catalyst, right?
Sure. I'm not.
Wouldn't be a bad thing.
I suppose we could look at that list if you want it, and we could all go down the list and just look at the highest short interest names. I haven't done that yet. Maybe I suppose I could. Those are the junky ones, so there'd be a lot of overlap, right? To my point, but yeah. So doing some buying yesterday, Tuesday, yesterday, today I'll do a little bit more, but I'm all in with you guys on this end of the year rally. So let's go. It's a good thing I had some cash on the sidelines.
Maybe we will go through the most shorted stocks.
Maybe we should. Okay, so as a reminder, we'll have Neto on in like 2 minutes, just real quick. I hope just to talk about CPI. We haven't even talked about it at all yet. I just saw the numbers and they appear to be very in line. All right,
8:30. They just came out.
Yeah, out at 13 minutes ago. Market is actually I don't even have a short-term chart up, so I wouldn't even know.
Wow.
Market's down a little bit. All right, whatever.
Spencer, do you know what today is?
It's not Friday the 13th. That's tomorrow.
So Friday the 13th is technically when the market bottomed last year, right? So the 1-year anniversary would be tomorrow. Yeah. But this is October CPI day, and that's also when the market bottomed, right? It was just on the 13th.
I didn't realize that was the same day.
Yeah, the market bottomed on that nasty CPI print that everybody thought would tank the market. We undercut the lows. It looked like we were going for a plunge, and then you got the bullish engulfing. That was on the heels of the CPI data release this time last year.
Yeah. One hole DVA. We were all over that on yesterday's show, man. Where were you? Yeah, Ozempic is a super drug, apparently.
So Delta beat earnings out here this morning, but
we have a few earnings. We have a few earnings to talk about. We can hit them briefly right before Neto comes on, and then after Neto, we'll have Julius on. Delta, it was a beat and a beat for Delta on the top and the bottom line. Did they give guidance? I don't know if I have any guidance here for Delta. A lot of different headlines flying around this morning.
Do we not overthink the airlines because they're obviously just saving so much money on jet fuel due to the reduction in obesity rates from Ozempic?
That's like 3D, 4D chess right there.
So as funny as that sounds, Spencer, that was an analyst note last week.
Was it?
From Jefferies. How much the airlines will save in cost reductions from less jet fuel due to their planes weighing less.
I'm sorry. They did provide guidance, and they tightened the range, so not too much to take away from that. They just tightened their EPS range for the year. They gave guidance for the current quarter, which was in line with estimates, so nothing to take away from that, really. I mean, it was an okay report, but come on now, it's the airlines. We've talked about this.
You know how we come on here a lot, Spencer, and say like, "Oh, these banks, they're so terrible." But if you have to buy one, there's J.P. Morgan. We were just talking about this the other day. That's Delta for the airlines. If someone is like forcing you to buy airlines,
okay,
you buy Delta.
Yeah, maybe. Okay, let's move on to that. Let's bring on Neto real fast. We'll talk CPI, and then we'll bring on Julius. Neto, you here? He's here.
Here. What's going on, guys?
Hey, John.
What's up, man? Thanks for coming up early with us this morning. You've had maybe a busy morning, maybe not a busy morning. I don't know. How's the number been?
It's in progress, Spence. We have CPI number came out. Obviously, we've had a lot moving around. The number came in line in terms of the front month and the year. So the month over month headline number came in line, supposed to be a 0.3. The unrounded number came modestly higher. And then the X-Food Energy also had a survey of 0.3. It came in modestly higher, like a 0.32. But in terms of most people see, I'm going to get a little wonky on you here, Spence. But most people see just at one decimal place. But CPI analysis has gotten so granular that now people are looking at 3 decimal places to get a sense of, okay, was 0.3 like closer to 0.4? Was it closer to 0.2? Okay. And so the 2 headline numbers, I mean, the headline CPI month over month and the X-Food and Energy, what they call the core CPI month over month, both came in modestly higher than 0.3 from an unrounded basis because the Bureau of Labor Statistics rounds off those numbers. Okay. So they both came in modestly higher.
So does this support the argument for no more hikes or not?
No, it doesn't argue against that. Okay. In other words, the headline year over year, I'm not like a lawyer.
You sound like a lawyer.
I know. It's here's the reality. We have a new Fed. The Fed came out in their Fed minutes yesterday talking about higher for longer. That was reiterated in those minutes. And the reality is that this is kind of part of a narrative that systemic or inflation has become more systemic, and this doesn't do anything to rebut that. Okay.
Fine. So higher for longer. So why are futures down?
Futures are down because we got a little, again, the unrounded numbers were a little bit juicier, were a little bit hotter than what people were hoping. And the reality is we've also bounced quite a bit. Fixed income has bounced quite a bit, given sort of the geopolitical tensions that have been out there. And so we've seen a little bit of an ease off in gold, a little bit of ease off in fixed income. But I don't think this is material enough. And I think that I think gold could go back and test its highs today. But I would look at market position in terms of how extended gold is, how extended bonds are, how extended the market is, kind of after the last couple of days. And with the CPI number that came in basically in line, but a little hotter, there's just some position unwinding, I think, that's flushing out because of that.
And then can you put this in context to the hot PPI number from yesterday?
Sure. So the PPI number deals with wholesale prices. So in other words, it's what the margins are on the wholesale level.
Right.
They definitely, if you're going to bank on what the PPI is to try and forecast CPI, you're going to be very frustrated. Okay. But they can both represent a larger secular trend of pricing, but one happens at the wholesale level and then one's passed on to consumers, which is why the Fed, which tracks the core PCE, this CPI number is more about what the consumer pays. Okay.
Right.
Where CPI is more about margins.
Okay, we'll keep an eye on this obviously throughout the day and the reaction to the number. As you said, we have bounced here in the future, so I guess that's something. Watching gold as well. All right, Neto, thanks a lot, man.
Steve, see you guys later.
Thanks, Sean.
That guy's up at we were talking about yesterday about living on the West Coast. He lives on the West Coast and he trades these numbers, which means he has to be up at 5 in the morning to get ready to trade a number, right? So it's wild, man. Totally wild. But hey, it's a lifestyle.
So this is basically in line, right? Not
well. What he was saying was that the headline number, while in line, if you go deeper on the further out on the decimal, and it wasn't as good as the headline number indicated.
Okay.
So now we're looking at decimals now, and I realized we had to go that far, but we do. Anyway, biggest takeaway for me right there was watching gold here, and to his point about the futures already bouncing. So let's pull up the gold chart real fast. Yeah, watching gold for
jobless claims look more or less in line too.
Jobless claims honestly stopped being relevant 2 years ago. But whatever. Okay, should we bring on today's featured guest? We have the good one here, Julius De Kempenaer, the guy who created relative rotation graphs. I think a really good visual way of telling the story of what's happening out there in the market. So we got Julius here. I think he's ready. So let's bring him on.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey,
Julius, welcome to the show.
Hey guys, thank you. Honored to be here.
How are we doing?
I'm good.
How we?
I'm actually 6 hours ahead of you. So that the guy on the other side, who's 5 a.m. in the morning, for me it's at 3 p.m. So I'm good.
You're in the Netherlands. Where are you?
I'm in the Netherlands, in Amsterdam. Yep, that's right.
Pretty cool, man. All right. So talk to us about what you're seeing. Tech is rotating. Got to be green. Communications must be up there too. What else?
Depends a little bit on which time frame you're looking, but let me first grab a window to share with you guys.
Why don't we take a step back first? So
Yeah. Wait,
Julius
why don't we explain what these are first, and then we can actually get into the yeah.
Yeah,
Julius,
that's fine.
So Julius has created, I guess, probably one of the more valuable, visually appealing, just easy to understand tools for analyzing relative strength and the momentum of relative strength, right? So these are called relative rotation graphs. You've probably seen them. Here it is, pictured on stock charts. You can run them there. I'm going to back off and let you explain the rest, but this is what it looks like.
Yeah, so let's do a really quick introduction then. So as you said, it's a visualization tool. It's not necessarily a trading tool. It doesn't give real signals as such, but it's a visualization, and it's coming from a high level perspective. And one of the main reasons why it actually came to life is because my former life as a analyst for institutional investors, I needed to basically paint a picture of an entire universe, and it had to be based on relative strength, because the only job of these guys is to outperform the benchmark. They don't really care whether the market's going up or down. They need to be in the stuff that's outperforming the benchmark. So that's the game where the market goes down 10%, you go down 5%. You're a hero because you beat the market by 5%, despite the fact that you lost 5% of your clients' money. So that's the background. Now, if you look at the chart on the horizontal scale, it's the JDK RS ratio. That's the metric of relative trends. It measures trends in relative strength. And there's a little story there, because that was my first metric. Because I always got question of these guys: what are your 5 best sectors? What are your 5 best stocks? And as you know, what I call raw relative strength or outright relative strength doesn't give you that answer, because the numerical value of such a comparison doesn't make any sense. You can't really compare it across the universe. So I needed to find a way to actually be able to rank those relative strength trends. And that became the JDK-RS ratio. And that worked for quite a while. I used it in my research. I used it to rank a universe. It was a table in my reports, and that was all good. And then come 2000, dot-com bubble, NASDAQ goes to 5,000, and all of a sudden starts to come down. Now, there's obviously, when you look at trends, there's obviously a lagging component in there. So what happened is that my JDKR's ratio remained elevated while the market was come crashing down in case of the NASDAQ. I got an email from an Italian hedge fund manager saying like, hey, Julius, this time your system didn't work too well. And I was looking at it and I had to say, like, he's right. So I started to go back to the desk and do a little bit of homework, and then I realized that we have in our technical toolbox is momentum, rate of change. And that's a leading indicator. It just like turns or flattens before the real trend moves. So I started to play around with that. Obviously, you run into the same problem as you have with raw relative strength. These numbers are not comparable. So after a while, I started to run those momentum numbers through the same sort of algorithm that I'm using for the RS ratio. And all of a sudden, I had a table with 2 columns, a report with 2 columns. Yeah. And we were technicians, so we like visuals, we like history. So I started to play around with some graphic formats. Initially, just the what we call the RRG lines. And if I can bring that up for you right now. If you show that, these are what I call the RRG lines. So the red line here is the RS ratio line, and the green line is the RS momentum line. And those are the ingredients, the basic ingredients for an RRG. And literally playing around in my Excel sheet, because mind you, all of this was created in an Excel sheet, which probably I was the only guy that could read it, because it had 1 million lines and 1,000 columns and a lot of VBA code. And I started playing around with it, and all of a sudden I hit on a scatter plot, just a basic scatter plot. And that was the start of it. And building up on that, basically emerged RRG. And what you can see here is true sector rotation, because this was the first time I could actually visualize that what everybody was always talking about, sector rotation, is actually rotating. Because most people talked about sector rotation by showing these sine waves where they put this, it goes up and then it goes below 100, it goes down, and that repeated itself. And here you basically have that same sequence, but now you can see that it is rotational. It rotates around the benchmark and it's rotating clockwise. That's the super fast synopsis of what it is.
Julius, when you first created this, did you always have the tails? Because
No. No. The first time I had just the dots. I had these two. I had the table with the two columns, and I just I goes in Excel. You just select an area and you just press on the various chart formats.
Right.
So I hit on scatter plots. I got these dots on a screen, and it's one of the what's that? I mean, what am I looking at? I really had to digest what that was, and I thought, oh, that's really nice. And then it sort of sits on your desk for a while, and you think about it, and you mull about it. And I thought, you know what? It's interesting to see where they are, but I need to see where they're coming from. So I started to put some VBO together and basically do the previous version, so I could see where they were last day, week, and where they are now. So you the start of that move. And then it's a bit of a funny story because you all know Dave Keller. At that time, Dave Keller was a client of mine. He was the managing director of research or technical analysis at Fidelity in Boston, and he was one of my users. So, as an analyst, you speak to these people every now and then. So one day I was on a call with Dave, and we were talking about it, and he tells me, "Hey, Julius, that last page of your report, which had that pre-embryo status RRG with the two dots." He said, "I print that out and I stick it on my wall." And I said, "Dave, why are you doing that? What's the use of that?" And then he says, I got a stack of them. And you remember when you were in high school and you had a notebook and you were drawing that little puppet on the bottom of the page, with the hands. And on the next page you had it, and the other one, and then you did it. Oh, and then if you did that, then the puppet would start to walk.
he was making his own flip book.
Yeah,
we call it
and that's what sort of alerted me. Hey, that's cool. So we coded that up, and then you can actually see the tail and you can see it moving, and that's basically how the tail goes.
Explain why that's so much more powerful and how you use that. Right, the tail really tells you about the direction, and explain why that's important and what kind of direction you're looking for.
Tail tells you so many things you can read from the tail. First of all, it tells you where it is right now, and again, relative to the benchmark and relative to every other security on that plot. But and the chart that you're looking at right now is actually quite indicative. You can see, for example, a few things like the tails have different lengths. So here is energy, which is quite long and rolling over. Here is technology, which is not as long, but curling back up. Here is communication services, which is even shorter and moving back up. Here's staples, really short, but you can see how that just rotated back, just like utilities, which is right here. And you can see that they're hooking back down. So the length of the tail indicates the power of the moves, indicates some sort of momentum about the move. Right. Another thing that you can look at is the distance between the nodes. If it's increasing, the power is increasing. If the distance between the nodes is decreasing, power is decreasing. I can talk about this for like forever, but there's a lot of stuff that you can learn from these tails.
So say we didn't have the tails here in this example, you would see something like financials, XLF, and say healthcare. Very close to each other. Both look like they're heading towards leading, right? But when you put the tails on there, I like healthcare a hell of a lot more than I like financials, right? Because financials, based on the last couple dots here, are now pointed straight to the lagging quadrant, while healthcare is still up and to the right? So you need that context. It's telling you where the path is.
Absolutely. You definitely need that. And you're absolutely right. Financials is in trouble because theoretically, but markets are never following our theories, all these tails would travel sequentially through all four quadrants. That's the ideal situation. But that doesn't always happen. What can happen is that a rotation takes place completely on the right-hand side or completely on the left-hand side.
Yeah.
And that indicates a very strong relative trend. And I think communication services at the moment is a good example, because what you
Yeah.
can see here is starting to curl back up. And if I scroll back through history, then you can see how it traveled through leading, lost momentum, but never moved to the left-hand side, which is the downtrend, the relative downtrend.
Right.
Now started to curl back up. So the best way to describe this is it's looking at trends of relative strength. Now imagine a relative strength line, just a straightforward, outright relative strength line. Trends are never a straight line. It's never a straight line up. So it's like, on a price chart, higher highs and lower lows, and that's what you see here. So when you see something in leading and then you see it rolling back like the communication services here, that's the move from the high to the new low in the relative strength line. And that's a new higher low. So it indicates that it's actually a really strong relative trend. And that brings me to the next point. These are actually the most reliable signals, because what's happening here is that you're embarking on the second or the third or the fourth lag in a relative trend that is already rising. If you move from improving to leading, that's the turnaround situation. That's where you go from a relative downtrend to a relative uptrend. And obviously that's a lot more risky. There's a lot more risk inherited there than when you move leading, weakening, back to leading. And the same happens with the on the left-hand side with the rotations. For example, Staples is a very good example here, where you move and you see that it. Let me highlight that; it's better visible. Where are you here? So you can see how it moves, and it moves down. So this is actually Staples actually quite some time. So here it moved down. We're talking February 27, week of February 27, 23. So the start of the year. And it's been on the left-hand side all this time. Hooks up to improving, but never makes it. Comes down again, and is really weak. And now moves up, and then boom, here we are. So we're starting another new lag down in the staples sector, and as well for utilities, by the way.
Can we throw up the XLC chart, Spencer? I want to show the relative trend, kind of illustrate the point he's making about staying out of the lagging quadrant, staying off the left-hand side, right? So what Julius was just saying, correct me if I'm wrong here, right? XLC never even entered the weakening quadrant or the left-hand side, or I'm sorry, the lagging quadrant or the left-hand side of the RRG. It speaks to the resilience of the relative trend through corrective phases, right? So you see, starting maybe May or June here, you got a little sideways in the relative strength line and lower pain. Never really turned lower. Like you said, it was maybe a sideways trend for a little bit, and then it reasserts itself and keeps going higher. Is that what that should look like if we just stay in the green and yellow zones?
Yep, that's what it is. I actually brought it up the same together with the RRG line, so you can see the interaction between the two.
Yeah, throw that up. And are you actually looking at the RRG indicator lines and using that as any sort of signal or information?
Yeah, I use it to basically, it helps me to associate what's happening on the chart with the RRG. So the information is essentially the same. It's just displayed in a different way. On the RRG, it's in the way. If you plot the RRG lines, so the RRG indicators on a normal chart, then you see them moving like any other technical indicator. But when you combine them, so I usually have my price chart with my relative strength and my RRG lines next to the RRG, and then the RRG gives me my high level overview, gives me the relation between everything. And then on the price chart, I can actually see what's actually going on there.
Great.
Okay, we have a couple good questions from our chat I want to get to, Julius.
Sure.
From Shoy, I love RRG, but never managed to use it. You bring it up on the screen. Never managed to use it to trade. What's the best way to use this info to trade or invest?
Well, as I was just saying, I don't think it should be used as a standalone system. Although I don't believe that any technical tool should be used as a standalone system. It's it's a puzzle. We build those puzzles every day, and then overnight someone comes around and throws everything upside down, and the next day we need to start again. And that's my starting point is the RRG. That's pretty much if I stay with that analogy, it's like the box of the puzzle with the with the image, how the puzzle should look, and then you start to start piecing everything together. So RRG is my ID generator. It tells me like, hey, you need to look at that. Hey, watch out there. which is actually what I also used it for with my institutional clients, because they were always very focused. They were, they were, laser focused on one sector or one group, and then they tend to forget everything around them. So this was my way of basically, shoving it in their face, like, hey, dude, you're looking at the wrong stuff, because they were looking at, I don't know, chemicals or technology, and then, behind their backs, financials were crashing and energy was moving and everything was moving, and they didn't pay attention because their focus was on another
So,
sector.
so along those lines, then here's a good question from Andrew: are you looking for the stocks in the sector that are improving, or waiting for the whole sector to improve, to show relative strength?
Ooh, you're looking for the stocks in the sector, or wait for the sector.
At what point will you look at one of these and say, okay, I want to drill into that?
Yeah.
Right.
That's, yeah. So for example, if we stick with this here, I now really like the rotations for communication services and technology. So for me, that would be the reason to actually dive into the technology sector and the communication services sector. So this is the communication services chart. If I bring up RRG, and then we have some of these predefined groups. So what I can do is I can bring up the members of the communication services sector,
There
and
you go.
then look at all the individual stocks in that sector and make an analysis of which stocks are outperforming or doing better than XLC itself. So now I'm one layer lower. I'm now going to the individual stocks. And it's the same story. So if I do a really super quick analysis here, I think that T-Mobile, AT&T, T-Mobile, to a lesser degree, Fox, really nice. Here is Meta starting to move up. I know from Hard that Google is doing really well. You see those tails. They moved. Look at that, how that moved. That is a really nice move from leading sharply back up. So through weakening sharply back up. That's really nice. So you can use this setup, this graph, to actually zoom in on the XLC stocks and try to find the ones that you really like or that are doing really well.
And how did you click in and do that on stock charts? You literally just click the sector from
Yeah,
the chart, you look at the industry.
so here in groups there's a whole set of groups that we can do. So asset allocation, this is the one that we start with, and here you got for every sector, for every group, you've got all the members. I do something with equal weight. I can do the breakdown of the Dow Jones. I do growth value. Talk about growth value, guys. This is a great chart. Look at this. So here's growth value.
Wow.
This is growth. This is value on a weekly scale. If you look at it on a daily scale, you can get it even stronger. So this is telling you a story, right? This is telling you a story to prefer growth over value. But watch this. If we do this on a monthly, that's super long-term trends. Growth has only just moved into the leading quadrant. So there is a lot of backing for a growth-orientated move that seems to be getting underway again. So you see it on the monthly, it's really good, and you see on the weekly we had that little dip that we had there, but growth is rotating back up and value is rotating back down. As I just told you, these are the strongest moves that we can get because we're embarking on the second leg of a relative trend that's already moving higher. So it won't get much better than this.
Yeah, I love that. This makes me think we've been sharing some ratio charts lately internally and on Twitter of growth versus value ratios that have pretty much been stuck in the mud for 2-3 years now, just straight sideways, whether it's XLK SPY or Russell 1000 growth versus Russell 1000 value. And now all of a sudden it looks like they're resolving these multi-year ranges and gearing up for another leg higher. And that RRG would very much support that. I'll just say too, as at All Star Charts, we will tell you that relative strength is the next most important thing outside of price. Right? It's our favorite tool. There's nothing better than it. And the RRG, I've used it so much in my career now. There's probably not a more intuitive and convenient way to perform top-down technical analysis. And Julius literally just showed you in 2 minutes how you could do it right on stock charts. You go from the sector you want to the industry groups. You pick the industry groups. You look at the components. You have it all right there, and you're done. I was giving presentations in Asia in July, and typically we'll look at all of the different relative trends, right? XLK SPY, XLP SPY. And I'm there. I got 30 minutes to give a presentation. I got 100 charts. I'm like, I don't have time for all these relative trends. So it's RRG all day. And I was just throw up the RRG. It's one slide. It shows it all. It's fantastic. So thank you, Julius.
Again, the point is it should tell you where to look, right? That's the point.
Yeah,
It should
you
tell
can
it
you
should
can
tell
come
you
up
where to
with
look.
if you really want to, you can come up with some trading rules and signals if you want. But people ask me all the time, what are the rules, what are the signals on an RRG? And then I counter back. I say, what are your trading rules on a bar chart? What are your trading rules on a candlestick chart? Because it's different for everybody. Now,
Yep.
he trades a 5-day breakout, probably very aggressive. Another one trades a 20-day breakout, less aggressive. If you go to the RRG, if you move from lagging into improving and you take that as a trigger, you're pretty aggressive. If you
Okay.
if you wait until you move from improving to leading, you're probably very conservative. There's a lot of things in between there.
All right,
So,
people.
wait,
go
one
ahead.
more. This is an important one. The
Yeah.
RRG is a paid service on the platform. I think what you just showed, that's free on stock charts, Julius, right?
No, this is a paid. You need to have an account. So the free version only shows you a bunch of major U.S. stocks, but
Got it.
this is paid. Not super
Where
expensive.
else? Where else can people find it? I use it on Optima. I know.
Yeah,
Optima.
Optima has it, of course. They've got a a lot of functionality around RRG, especially if you're more quant orientated. You can do all kinds of scripting. You can query the platform on the heading and the tail length and directions and all that kind of stuff. Way more flexible to put it in some trading system. It's on the website of Hong Kong Economic Journal, believe it or not. It's on the European website of State Street for a bunch of sectors. It's on Bloomberg. It's on Refinitiv, almost London Stock Exchange now. So there's a few more places. And we're always looking to add more.
Julius, the chat is saying that we need an RRG on TradingView. We got to put you in touch with Pierce. You guys
Yeah, I'm waiting for TradingView to approach me. I know that there are a few people who have tried to copy it on TradingView. Unfortunately, that's an infringement of copyright, so we had to take them down. There's probably still a few out there that I don't know of, but that's the whole story. From another perspective, if people try to copy you, it's probably a good thing as well. Although I would like to prefer to keep it neat and clean and do it by the book. So, if TradingView is interested, they know where to find
All right, last one, Julius, from Andrew. What settings would you use based on your holding time? So if your holding time is 1 to 3 months versus more than a year, how does that change the settings you would use?
So that's a very good question. When I use this for my institutional clients who are not super trading orientated, of course, I always told these people that, and my time was a weekly chart. So I was publishing weekly charts with weekly RRGs. And I always told them that whenever I would change a recommendation, and my recommendation could be outperform, neutral, or underperform, those were the only 3 possibilities for me, that would remain in play at least 3 months. So the question was here, you typically hold for 1 to 3, okay, so at least 3 months. Very often, much longer. If you translate that to a daily, you would have 3 to 9 weeks. So the person who wants to hold 1 to 3 months, you're probably best off looking at a daily RRG because that's kind of the length and duration of the trends that you're looking at. We also at Stock Charts now have intraday RRG, so you can basically translate that down to a factor of 3, go to 60 minutes, 30 minutes, etc. for the look ahead period. That's what I'd say. So 3 months on weekly is about 12 to 15 periods ahead. Translate that to a daily, you're looking at 12 to 15 days ahead. Translate that to hourly, you're 12 to 15 hours ahead, etc.
Julius, I think everybody in the chat really enjoyed this. Some people want to learn more. Where can they find you? I know that you're writing about it pretty frequently.
I'm writing about it on Stock Charts. Stock Charts blog is free. I've got a weekly show on Stock Charts Television. It's called Sector Spotlight, where I do a lot of work on sectors. We've got the website relativerotationgraphs.com, although that is being in the works to redo that. It's pretty old, and I personally don't really like it anymore. So there's a revamp going on. StockChart is probably your best resource, and the website of Optima, where there's a lot of theoretical stuff. There's quite a few interesting white papers on how to use RRG and interpretation and some sort of the um, educational aspects and rationale behind it.
Yep. All right. Thanks a lot. Julius De Kempenaer, founder of RRG Research, Relative Rotation Graphs. Thanks a lot, man.
Thanks, Julius.
Thank you, guys.
All righty. Man, good stuff. Again, if you're a visual person, as I am, then it tells a good visual story.
I'm not here to be nice to anybody. This is one of my favorite tools. I mean, this thing is so good. I can't say enough nice things about this. Whether it's for like presentation or publishing purposes, right? Like I just explained, it does a great job of like summarizing like 20 different data points into one visual, which is hard to do a lot of times, and just the information in it, right? You know, the combination of trend and momentum is so strong. I love the story, the background story that he just gave, and how he got there. Imagine looking at him with no tails at first, right? So it's amazing how things kind of evolve. Like one step, wait, we need the tail. We got to see where this thing came from. Like look at a chart without any price history.
Right. Yeah. All right. We got some action happening out there. Let's see how Kimmy's approaching the market today. We're past all of them. I think there's no more macro data happening this week. CPI was the big one. So let's see how Kimmy is approaching things now that all that's in the rear view. And I think we have a clearer rest of the week on the macro front. Let's see.
Good morning, guys.
Where in Kimmy's house are we now? Whoa, look at that. Yes.
This is Miss Liberty. Say hi, Liberty.
Look at that.
She's like, this is too early.
Don't I know it?
Mind you, she's going to be 15 years old in like a week. So she's kind of sedentary in her little rug over here, but she sits next to me in trading. I sit over there.
Sounds like she's had a good life. 15 years is strong.
Maybe she's camera shy. She's keeping her head down. There she is. She's a Rhodesian Ridgeback. Hi.
Okay, I was gonna ask, but I don't really know.
She's a Rhodesian Ridgeback. They're a South African breed. They're pretty cool. If you ever heard keeping a lion at bay, that came from a Rhodesian Ridgeback. They used to chase the lions out of the villages.
All right. The more you know. The more you know. The more you know. I don't know anything about dogs, so.
Aw, there she is. Hi, pretty girl. She's like, what's going on?
All right. What are we watching today? Anything good?
So pre-market. So I've been talking about on the SPYs, us closing the gap at 438.40 or so. I wrote that all week. Okay. There's potential up to 438. So if anyone took the SPY trade, I wrote in the trading room this morning. That, we're here. We're at this 438.40 area. You could have sold pre-market if anyone did have the SPYs or IWMs or the Qs or anything like that. Now CPI came out. I think the SPYs are around 437 or below it.
Yeah, 436 right now. 436.60.
Yeah. Okay. Wow. It pulled in.
Yeah, a little bit.
So it pulled in some. So it's got to be a little bit of a dicey day. So we still didn't close the gap during trading hours. So we need to see if we go back up there again. But there was opportunity to sell this morning. I've been looking for that target. So we'll see what really goes on. Liberty, come say hi. I know. I am doing this because this girl's going to be 15 years old. Look at this. Liberty.
Wait, when's your birthday?
October 20th. Liberty.
Oh, that's next week.
What?
It's next week.
Pick up your head. Mama. You're probably like, that's gross. I love my dog.
No, that's not good. That's
Slobber,
normal.
slobber all over. I love it.
Yeah. See what happens when JC's not here? We have way more fun.
Sorry, the camera. I'm like sitting down next to her. She can't walk that well, but we have great harnesses.
All right. Now I know why you're always in a good mood, because you got that hunk of love.
When they say man's best friend, they mean it. I'm sorry, she's not. She's camera shy. She's keeping her head down.
That's all right. All right, we'll let you go. head on over to your trading room if you want to get Kimmy's trades in real time. Head on over there
Thanks.
with her. Have a good one, Kimmy.
Bye-bye.
All right. That was. I mean, I know she did say she would bring her dog on, but I wasn't quite sure. I didn't quite believe her, but that was a nice surprise. That was a nice surprise. So that was fun. Hope you guys enjoyed that. You can get a lot more of that, obviously, in her trading room. Link to which is in the description of this video on YouTube. Excuse me. Okay. Here we are, 9:21. Got about 9 minutes till the open. Let's do a couple of earnings. We talked about Delta Airlines very briefly, but I believe we actually have a chart of that handy. If we could pull that guy up. We talked about the numbers being okay and the guidance being fine. Yeah, look, earnings and no earnings, it's still an airline, right? Ask yourself if that's really what you want, right? I don't know.
This is not what you want? Analyze the chart. What's wrong with it?
I shit ton of overhead supply. That's what I see.
Hey.
And some pretty hardcore resistance at 61, whatever that is, or whatever that's. Yeah. So, if by some miracle you get above 48, cool, you're going to get stuffed.
Yeah.
It's 61.
What
So
I hear is this is just a sloppy mess.
Yeah. Anyway, all right, let's move away from that. Let's look at which one should we do next? Let's look at Domino's Pizza here. DPZ. They reported this morning. Earnings good. Sales slight miss. Same store sales okay. Up 0.6% year over year. The guidance that they gave was at the low end of their previously issued range. So still within the range, but just at the lower end of that range. You know what? Maybe I should tell you what the stock is doing this morning because I don't actually know. Because that's a nice chart, but it doesn't tell you how the market's reacting in real time. Come on, computer. Why are we not loading for me?
So earnings season has begun.
It opened down, but we've come off those lows, so we're almost unchanged from the close yesterday. So that's where we're trending upward this morning.
Yeah. All right, fine. Looks like markets want to give a little back here today. Oh.
Did they blame the lack of sales on Ozempic? No, you know what? Good question. I should probably do a Control F search for Ozempic in this report. That could be fun.
What is?
I doubt it.
What's the Papa J's ticker?
PZZA.
Oof. All right. Well, Domino's looks better than Papa John's, that's for sure. Both of these stocks have just been so good for so long. Their product is absolutely terrible, but the stock price just
U.S. delivery same store sales. I didn't realize that it would make sense that they cut out delivery as its own line item, but U.S. delivery same store sales down 2.3% year over year. Okay, so people are doing way less delivery.
Deliveries are down, but that's a COVID cliff thing, right? That's a pandemic.
Right. That's a pandemic thing. I'm sure they were way up. Okay, let's move away from Domino's. Let's talk about Fastenal here. The nuts and bolts of the market. EPS slight beat, sales slight miss.
Ripping.
What'd you say? Ripping? Yeah, we're up about 4%. We're up about 4% this morning. Yeah.
Fastenal, like Spencer said, nuts and bolts, electrical components, things that are used in the manufacturing process, far and wide across all these different industries and sectors. Fundamental analysts will tell you this is one of those just golden earnings reports every quarter that people will watch for some sort of read or vibe on the broader economy. This is what some fundamental analysts will use this report for. So this is a widely anticipated, a lot of eyeballs on this report, and it's just not the biggest stock, right? What's their cap these days? It's been around forever. 32 billion. So it's not a monster company, but involved in a lot of things. So a lot of information there. Market seems to like it, up 4%. That's never a bad thing. This is an economy stock.
Yep.
So
and then
I'll tell you too, Delta, I think they're up marginally. Yeah. Encouraging, right? economy stocks. You want to see these more cyclical names come out with, if not strong reports, strong reactions to weak reports. Sometimes that's better.
You're right. You're absolutely right. So here's a weak report but it is a weak stock, so for good reason. Walgreens, just disaster this morning, just a train wreck of a report. EPS below estimates, sales below estimates, guidance below estimates. Just a disaster here. There's a Walgreens around the corner, so I'm there somewhat frequently, and goddamn, there's just the prices are out of control. They're just so expensive.
Spencer, this is truly amazing, right? This chart, let's add some context to it. That second green arrow is drawn at the financial crisis lows almost 15 years ago.
Goodbye.
This stock has gone nowhere in 15 years. Zoom out on a chart of the S&P or the NASDAQ 100 or any index. See what it's done since the financial crisis. Even utilities went up over that time period. Walgreens, same place. This is what you call a secular laggard. This is a monster top.
Yeah.
Monster top.
I don't know what else.
So they just got a new CEO, somebody came out of retirement to run this company. I didn't really read the story. I just heard it briefly.
Well, yeah. He's new CEO effective next week.
Formerly of Express Scripts, from what I understand, which was a really successful business that was bought out by one of the health insurers years ago.
Yeah.
Why would you ever come out of retirement to run a company like this? Headache.
I don't know.
Like Bobby Iger, I thought the same thing with him when he came back to Disney, right? But he owns a ton of stock, so he has an interest. I don't know what this guy's thinking.
Look, it's nothing. It's nothing against Walgreens. It's their business, right? Because you can look at CVS and say the same thing. So it's not like Walgreens isn't uniquely bad. Their industry is uniquely bad. So I just don't know why you would want any piece of this at all.
Are you talking about all the smash and grabs?
No, there is no smash and grab in New York anymore. Everything is locked up.
Okay.
I should know that Walgreens in typical market fashion is trading higher on this report, so we're almost at $24 here this morning. But congratulations, you're up $1. You're up. Yeah.
Let's take a step back. We just talked about a couple different reports. Every reaction is higher. Listen, none of these are like critically important. Fastenal, maybe. Not bad though. Right?
Yeah, every reaction is higher. Yeah, well, Domino's just went green. Actually, Domino's is still going. So yeah, every reaction is higher this morning. Well, not every reaction. There's one more. I don't think we have the chart for it though. Alpha Metallurgical Coal, AMR, your favorite. Metals and mining. I'm watching metals and mining this morning because they're all down. I suspect they were down on this report. Not even a report. There was two things. There was from AMR, they gave a preliminary sales volume reading for the quarter. They lowered their coal shipment guidance for the year. And on the metals front, CMC, Commercial Metals, they're out with their earnings this morning, and their numbers were weak. So, look at that. We got the AMR chart.
Wait,
yeah.
CMC
So metals and mining are weak this morning.
Wow, CMC, the monster base there. Hasn't really been able to go yet. So for these coal stocks, every dip is just being bought so aggressively. I have a feeling we might look at this one this afternoon and say, wow, look at the wick on this bad boy. If you want an example of what I'm talking about, go look at the candle in Arch Coal from October 2nd. I think they came out and pre-reported this quarter's numbers, right? I think that's what it was, October 2nd. You got this big flush lower. The thing was down like, I don't know, 10, 15% at one point on the day, I think. And it climbed all the way back. Yeah, go look at that October 2nd candle in Arch. Can't see it there. Can't see it. That doesn't help.
I mean, this is not insignificant. I mean, we're down. We're opening down 6% here in AMR. You just gave back a couple months worth of gains.
No, you didn't. No, you stop. No, you didn't, Spencer. What are you talking about? AMR a couple months.
I'm sorry. All right, I'm sorry. 2 weeks. 1 week. 2 weeks. All right, whatever.
Okay,
no, more than that.
Can we put this in context? Stop it. Since June, the stock has doubled.
Yes, that's
matter of
true.
months.
Okay.
100%. So yes, this is a commodity stock. It's super high
Yeah.
beta. Analysts have a tough time gauging what the exact production numbers are going to be when earnings come out. 6% down move for a coal stock after this type of uptrend. I don't know. This is standard stuff and probably gets bought up pretty aggressively.
Maybe. Yeah, perhaps. Okay, what else did I have this morning? On the news front, a few other things, not so much related to stock movement, but news nonetheless. Ericsson, which trades over in Europe, but has a ticker in the U.S. as well, ERIC, disclosed a non-cash impairment charge of about $2 billion in the quarter. So the stock was actually trading up on that news because they also reaffirmed their guidance while they were at it. More strikes happening for Ford. About 9,000 members of their Kentucky truck plant have joined the picket line. So that's their largest plant by employment and revenue. So not nothing.
But this is bad and getting worse for these guys.
It ain't getting better. Yeah. Okay, so I had the Ford thing. I had Ericsson. Birkenstock had a shit IPO opening. What else is new? It's sandals, and that's what I got. So I headline about Microsoft having to, the IRS says Microsoft owes like 25 billion in back taxes, which is like a month and a half of revenue for them. So, 25 billion. Oh, yeah.
How much?
It's like $25 billion over the course of like 11 years, right? And Microsoft says that they're going to fight it. So this is going to get. There's no material impact on Microsoft. It's not going to be resolved anytime soon. But
they'll be okay.
Yeah, they'll be fine. I think they can sweat $25 billion. They make $50 billion a quarter. So
you want to do the latest in our installment of scary real estate articles on the internet?
Oh, should this become a segment now?
Yeah, I think we should do it. It's going to keep happening.
Maybe it should. All right. What's the article du jour?
I haven't even really read the whole thing yet, but Miami made the journal today. I think they pick like one big city a week. Have you been noticing like last week? Phoenix.
Maybe you're right. Yeah, maybe you're right.
Now it's Miami, which thank God it had to come back down to earth at some point. Miami has been as red hot as any real estate market since COVID now.
Yeah, but is there any real estate market that's more of a roller coaster than Miami? It just seems like, or Florida in general, it just seems just like.
And that's what the article was basically saying. So we'll see. I'm gonna be actually looking for some stuff up there in South Florida pretty soon. I'll have more information, some boots on the ground soon.
All right.
I'm looking at this GM chart, Spencer.
Yeah, disaster.
You could short this. I'm not out here like actively looking for shorts, but here, let's throw it up. Ford not as clean, right? But this almost looks like.
I bet the puts are expensive. I don't even know. I'm just guessing.
I would hope they are. Yeah. Yeah, they probably are. This kind of looks like Citi or Bank of America, but without the bounce over the past few days, right? Where's my deck here?
Whew.
I just sent
GM. That's a. Is that a 52-week low? No, last week. That was last week. Okay.
Yeah. I mean, it's coming off one.
Yeah.
Last week. Yeah.
Yeah.
I don't know. So you want to talk about the banks here? Do we have these? Where's my bank VWAP chart? Yeah, here we go. Okay. So this is the so that's GM. Lower bounds. If those go, you're looking for a short. This stock's in the news. Got all this stuff going on with the strikes. I don't love it. I won't be participating, but yeah, I could. Valid short setup here for sure. Right. So earnings really started today with some big ones. Tomorrow is the day. Spencer, what do we have tomorrow? Not Bank of America yet. What do we got? JP.
We got our calendar somewhere. So yeah, tomorrow is, if I can pull the calendar up, it's Citi, it's JP Morgan, it's Wells, BlackRock. There you go, PNC, and then UNH and Progressive for tomorrow as well. So
yeah, PNC too. Like I said, the regionals
No, that's the one. That's the one to watch, I think, because that's a super regional, and it's not quite a regional, but it's a really 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 big regional. But yeah, that's the one to watch.
The big boys are more or less okay. They're insulated, right? These big money center banks. There's just
Well.
from a proportionate to the broader business, lending just isn't material enough for them, right? They're too diversified, the big guys. The regionals, lending is such a big part of the business. Those balance sheet issues on their lending books will create some real problems. So yeah, I totally agree with you. People will be watching PNC even closer. There's the setup though, right? Coming off of the banking crisis lows, that's where this VWAP is anchored from the First Republic blow up lows. It acted as a nice little guidepost, leading the bounce or rebound off of those very extended lows from May. But just a few weeks ago here, circled in red, we lost the VWAP, right? So sellers taking control of the short-term trend. Anybody who bought the lows or the average buyer at those lows or after is now back underwater. So psychologically, it's a very important level. We're right there now testing it from below. Critical, right? This is the line to watch. So it's the VWAP from the May lows on the banking indexes, KRE and KBE. I think we will pick a clear direction for these indexes in the next couple of days, right? As these reports start to trickle out.
It usually takes it might take a week,
Yeah.
for them all to shake out. Yeah,
all the big guys will be done by like Tuesday or Wednesday.
Like Wednesday, yeah.
And the regionals are front heavy too. The regionals are really front loaded. You get most of the regionals in the first week or two of earnings.
Yeah, I'm sure we're gonna have Truist as well. That's the other big one. So
yeah, Truist. That's a problem bank.
Yeah.
Aren't they a Florida bank though?
Southeast, I think. Truist and SunTrust merged, right? So yeah, it's a Southeast US thing.
Watch them California banks. All right.
That's where the problems have been so far.
Yeah.
So
look out for those West Coast banks.
All right, you want to do a hot corner real fast?
Yeah.
Do we have anything?
So we're gonna do yesterday's hot corner.
Yeah, we didn't get the chance to do it on the show.
And we had a nice list, right, coming off the holiday, so no filing. So we had like a double list yesterday, and we only had like one filing today. So,
all right, let's talk about it.
Hot corner. So hot right now.
Big list.
Big list.
Big list.
What slides are the hot corner slides on?
I see you, Rokana. Oh my goodness gracious!
Yeah,
it's a lot of trades, man, for one person.
So yeah, that's how they do it. These political filings, they usually it seems as though they'll make a bunch of moves at one time. They'll all be reported together. Their advisors, I think, have to do this for them, right? So they're probably making a bunch of moves here, quarter or whatever. So yeah. This is probably a good moment to talk about this. I don't overthink the political filings. These guys are doing their best out here. A lot of times they completely whiff. You hear a lot about how Nancy Pelosi and her husband are like these expert traders. They're not. They just bought big tech stocks, at the right time and happened to do it through leaps, right? So I think the weakest information from what we do here on Hot Corner is coming from these political filings, because they can almost be traps at some time, right? Where like maybe these guys think they heard something in a meeting but they don't really know what the vehicle is or how to invest in that kind of a theme. And I don't love the information. On the other hand, you have guys like Steve Cohen and Ken Griffin and Carl Icahn and Einhorn or whoever we'll get on our list. 13Ds, Form 4s. And these guys are literally experts. They're professional investors. This is what they do. They have amazing track records. That's why we all know their names. And then you really want to pay attention to like their moves. Then I think in the middle of that is the executives, particularly your C-suite, CEO, CFO, people who have a front seat to the business and what's developing and going on there, and probably have a really good idea or a perfect idea of future results or performance, right? When you see a CFO or a CEO come make a big splash, that really stands out. The political people, they hear things, they know people, this and that. They probably do their best. think they have an edge, but maybe don't. You get what I'm saying? No?
Yeah, I'd agree with all that.
You got to be more careful with it. Also, the size is, like our floor for materiality for the political filings is 15,000. I mean, JC comes on here and calls them pikers for dropping 100, 200,000, $15,000 makes the list. So you don't want to overthink these at all. Is interesting. They do typically come out by a bunch of blue chip names. That's what you're seeing here. AbbVie, Microsoft, Kellogg, CVS, McDonald's, Pfizer. Okay. The ones that really stick out, Overstock was a big one. And then Moon Lake Immunotherapeutics.
Overstock. I'm
MLTX.
looking at Overstock for a minute. Let's take a look at that chart.
We'll throw up the MLT. Do we have the Overstock?
Oh my gosh, this thing is this the most wild stock out there? It's got to be one of the most wild ones over the years. This thing
So they sell couches, but also mine crypto.
Well, now it's Bed Bath & Beyond.
Oh,
Remember?
that's right. Yeah. Where'd they get the money for that? I guess it barely cost anything. Never mind.
Yeah, probably cost a few $1 million. But Overstock went from 2 to 128. Now we're at 15. Oh my goodness.
Listen, it doesn't look good. This chart just broke the pivot lows. If we're below 1750, you don't want to touch it. We're not even going to bother throwing it up. Let's talk about this Mirati Therapeutics MLTX. This one looks like this one's trading like it's being acquired here. Yeah, that gap up back in June, and then just straight sideways right off of this 50 level. This one came public not long ago, and literally just been grinding higher, stair-stepping higher ever since its IPO. $3 billion, so big enough for me.
Yeah,
good one.
Yeah,
sizable purchase. This one certainly stands out. Also, maybe give a little honorable mention to Inter & Co. INTR. Nice base shaping up here. Not quite ready yet. This for me is like a buy on strength, about 450, 460-ish type of setup. Is this a regional bank?
I don't know. I don't know this one. INTR.
Can't be a regional bank. My data provider must be lying to me.
Let's see.
Major bank.
I've never heard of it before.
Yeah. Okay. So we'll take a look at this. Looks like insurance to me. Says it's a major bank headquartered in Brazil. So yeah, I got some reading.
That could be why I haven't heard.
1.7 billion. Look, it's a nice chart, so it will be on our list, and we'll probably write about it, put a trade idea on it, so figure out exactly what they do. I have a hunch that this is not a bank. If it is, definitely an international bank, right?
I think it's like a fintech, is what I think it is.
That sounds more like it. Also, based on when it IPO'd, that would make sense, right? This is a 2022 IPO.
Oh, there you go.
Ballsy move, though. These guys came public in June of last year. Not many companies were coming public at that time, I guess. That's what I'm trying to say.
That's true.
All right. That's it. So light hot corner. Spencer, if you want, we can go down the line. I don't have like a publishable table, but I can read through some of the most heavily shorted names if you want to have some fun with that.
Yeah. I mean, I could probably guess a couple of them, but go for it.
Marcus Lemonis is involved in Overstock now. I used to really enjoy that show. He came down and bought one of the key lime pie shops here many years ago. It's called Key West Key Lime Pie Co. It's right off of Duval Street. And it's kind of funny, like what they did. It was probably like the least popular key lime pie company. Probably wouldn't have been around for much longer. That's what he does, right? That's why he scooped in and saved it. But now when you walk in, it's the sign is like Key West Key Lime Pie Co. as seen on the Profit in like big letters. Like that's their signage. You walk in, they play the Profit episode literally on a loop constantly. It's on TVs, like all up in the shop. So yeah, interesting. I don't think it really saved the business, but it is still there like 6 years later. Marcus Lemonis.
All right.
Fame.
Yeah. Most shorted stocks.
Yeah.
What do we got? We got Beyond Meat on there. We got although they called a downgrade this morning, so watch that. Who else is on the list? I'm just guessing Beyond Meat. Here we go.
Oh, Fonz is awesome. Just sent me a great chart here.
I'm surprised. I'm surprised to see Sava on this list. Oh man. Wait, how about what?
VinFast. You got to take.
I skipped right over that. Is that even on there? Oh, it's the first one. I skipped right over it. How about Frontier Airlines there? And they're getting bought, aren't they? They're merging with Spirit Airlines.
What ticker are they?
ULCC, Ultimate Low Cost Carrier.
Oh my god. What a douchey ticker.
AI, that's not a surprise.
Trupanion is like that pet insurance.
Yeah. It's pet, something to do with pets. Yeah.
So, this cassava thing, we've talked about that on here. Just throw it out. It's always on this list. It's a hot stock.
It's a recent IPO. I'm surprised to see that on there. It's a recent IPO.
SAVA is?
Oh no, I'm thinking of Kava. Sorry.
No. This is like cassava bios, whatever.
Yeah, okay. Sorry, yeah. So yeah, this is the one that had the Alzheimer's thing, and then it wasn't, and then it was, and then it wasn't. Never mind. Yeah. Okay.
All right. This right between 4 and 8 here. Carvana, always on here, and it's been a great squeeze candidate all year. Stock has been fantastic. AI, same thing. Brian Lund talks about this one. He's a fan of this one. Upstart, another one. Talk about a hot stock. We got involved in that one earlier this year. I think, we put a trade on that one. Worked great from one of our short reports earlier this year. And then Beyond Meat, I don't know, man. A little note came across my desk this morning. They were just downgraded, $5 price target. Is this a zero? And how long does it take?
It might take a while. Aren't they? They're still pretty large, are they not?
Well, they were very well capitalized initially.
Right.
I don't know anything about their financials or how much they're burning. If they're making, I highly doubt they're making money. I don't know, but
it's a lot. It's a lot smaller than I thought. $500 million. I would have surely thought they were a couple billion.
Isn't the drawdown like 98% at this point from the highs?
Man,
that'll do that to your market cap.
This stock was so trendy. All they had to do was announce a new thing with a new fast food company, and the stock would have ripped 20%. All time high is 239. So 239 to 8. Mm-hmm.
So that was really a sign of the times. This Beyond Meat, these guys were kind of ahead of it, right? They IPO'd in 2019. Really, the whole crazy IPO market happened late 2020, 2021. Right, so these guys are one of the first ones. Really, they peaked out like a couple of weeks after their IPO. Never looked back. They're down 97% from their.
I mean, they had a good 2022. So, then again, everyone did. But
there aren't many stock charts I could find you today that look worse than Beyond. One that immediately comes to mind would be Peloton. So similarly, in about 7% drawdown.
Train wreck. Yeah.
They're not going to get bought, huh? So
Peloton's down. Wait, Peloton's down 5% this morning.
How is this company still worth $2 billion?
Why are they down 5% this morning? I didn't even see it. That's weird. That's a lot.
Let's see here.
By the way, let it be known. No news. Let it be known. Far more red than green on the screen, but ask me again in an hour or 2 hours.
So energy, let's just run through it quick. Energy, again, I'm going to look through the equal weight sectors here. Energy is positive. Everything else in the red. Materials lagging or leading to the downside. Real estate.
Tech is green.
Again, I read the equal weight sectors.
Oh, sorry. Okay.
I want to know what Peak is doing. I'm not telling you what the spiders are doing because then I'm telling you what two stocks are doing.
Fine. It's like 5, but all right.
You get what I'm saying. So on an equal weight basis, tech down 25 basis points here. You're right, Spencer. Maybe we turn green. Maybe we flip this thing around. 1, 2, 3, 4, 5, 6. This would be 7 straight up days. Something like technology if we close green today. At the same time, you notice the dollar? Not long ago, we were talking about how many consecutive weeks positive the dollar index had posted.
It's true.
Now it's been lower for like 7 straight sessions. We got a new streak. This one's red though.
Well, it's up today, so yeah.
Big levels for the dollar here. Let's see how this goes. Rates bouncing a little bit here today also after coming off a bit. Like Spencer just said, the dollar getting a little bit of a bounce here. So let's see how this all shakes out. Very encouraging still, right? Even if we're red today, tomorrow, whatever, what we did so far this week, that follow through, 3 green candles coming off the monster engulfings from Friday. The work here is done. They could take a breather.
She mentioned Carvana actually down 9% this morning. All right, should we bring on Sean? We got Sean here.
Oh, I didn't know we had Sean. I thot it was Ian today and he was sick. Yeah, get Sean on here.
Yeah, we got Sean here. Okay, I know. Sean's been waiting in the background patiently. Where's my I'm in the wrong spot for my Sean video. I'm sorry, Sean. I'm not ready for Sean. We're all ready for Sean except for me.
What's going on with the back? Why doesn't it say Strazza show today?
Oh, you want it to?
Yeah, what is this?
All right. Yeah, Strazza show. Right there. How's that? All right. Now I'm ready for Sean.
All right. Me too.
I was about to hang up on you guys. Thought you forgot about me.
How bad are you guys going to whoop our asses Sunday?
Well, the bad news for the Giants is that the Bills are a pretty good rebound team. You know, you were talking about Miami real estate earlier.
Yeah.
That roller coaster that is Miami real estate. I feel like that's the Bills' season this year. When they're great, when they're good, they're great. And when they're bad, they're terrible.
Oh, they weren't that bad last week.
Man, you guys laid an egg in week 1, though. They do that sometimes. And sometimes Allen just doesn't bring it, which is
week
scary.
week one was just the end of preseason. That's the way I look at it.
Fair. Yeah, that happens.
Yeah.
Do you worry, like, what if Allen has one of these bad games in postseason? That's a risk.
What I'm worried about is the Bills lost like 7 of their defensive players the last game.
Yeah, you mentioned that.
That's not cool.
And are they still injured?
I haven't been keeping up with the news, but it did not look good last time I checked.
So you're saying there's a chance?
I think basically you're gonna have to put Josh Allen and Stephon Diggs on defense because they're running out of players to play defense. That's what it's looking like.
Dude, Josh Allen's a beast. He could play linebacker.
Yeah.
You probably can.
All right, look, let's talk options here real quick. We put a trade on yesterday in Adobe. You were Strazza, you were riding me a little bit for being a little too conservative.
I was just joking. Yeah, but
it's okay. No, look, it's okay. It's okay. But I want to say one thing is that we're off to a really good start. Now, I'm not one to take a victory lap on a trade that we're in for one day and it's up. But for anyone who put this trade on and they're a little nervous because this is a higher priced stock, it does require a lot of margin if you did it the way we did it. We did a risk reversal where we shorted a naked put and used those proceeds to buy a long call in June.
Yeah.
Well, we did it yesterday for a credit of around $1. I think I got 95 cents for it.
Yep.
Today, I'm looking at it right now. I could get out of this thing for a $4.15 credit, $3 gain in one day. I mean, I'm not in this for a $3 gain, but a $3 gain in one day. And if the trade makes me uncomfortable, take the profit.
I love that. I love that. And this has been a fast market, right? We have these automatic reactions, failed moves. We got some like really powerful rally just, the first half of this week. I don't think there's anything wrong with that. This is going to have to take a breather at some point in the coming days or weeks. You could get back in. Yeah, kind of like this chart just looks so good though, Sean.
Well, look,
looks so good.
As I was saying at the beginning there, I did this a little bit more conservatively than you wanted to do. You were teasing me a little bit. It's okay. It's all good. But the reason why I chose to go conservative, Strazza, is because the long strike that we bought the June 700 strike. Now, 700 strike, that's an aggressive move. I'm not saying it can't get there. It can certainly get there. If there's another leg coming in this bull market, and if we're gonna rip to new highs in the overall broader market, like you think might happen over the next 3 to 6 months, Adobe most likely will be one of those names that will lead the way, and 700 is not a outlandish price target.
100%.
However, that's in a perfect scenario, right? That's a perfect market cooperating scenario.
Yeah.
I traded it conservatively in case we don't get that, because I'm still not convinced that stocks are going back to all-time highs before the end of the year. I would like to see it. I could see a case for it, but I'm not convinced yet. And so me doing the trade where I sold the puts to pay for those calls, that's going to help minimize my risk if Adobe moves higher but just doesn't have enough oomph because the market's not helping it along. That's the reason why I did the trade this way. That's why I sold the puts, to help with the premium. Now, of course, selling naked puts introduces a whole different area of risk, right? So it's not a set it and forget it type trade. We have to monitor it. So I will be aggressive in taking this off if I have to reduce my risk if Adobe loses the 500 level. Our put strike is 460, so we've got room to be wrong. But if we lose 500, I'm out. I'm pulling the plug.
I think this is a good little exercise, right? Because we never know what the market's going to do. If you get an absolute ripper sometimes, you get some really nice profits, puts us in a different position where all of a sudden we have a new decision to make, right? It's like maybe it didn't go according to plan. It went better than plan. Uh-oh, what do we do? So I would even say, like, I think you sold some XLK puts out here. What'd you do, straddle last week?
XLK, we sold a straddle in XLK.
I mean, and that's been up 1, 2, 3, 4, 5, 6. This will be 7 straight days now. Are you thinking about maybe closing that one too?
Well, my stop on the upside on XLK is 175. So we got some room.
Okay.
I'm not too concerned about it yet. We're not down a whole lot in that trade, but you know, we've got time.
Yeah, so here we are now. Just talked about it. Dollars come off for about a week here. Stocks have made a nice move. I think the time to be aggressive short term was late last week, really early this week. I think, like Sean is saying, a big part of this move seems to already be happening. We had some, sellers came in and staged a little bit of selling pressure yesterday. Now we're opening up red today. I want to kind of monitor this closely. And if you do have nice built-in gains from last week or earlier this week, like Sean is saying, from yesterday, yeah, pay yourself. Feed the ducks a little bit, right?
Hey, and there's a good question here in the chat from Mike Thornton. He says, would you ever consider taking off the naked puts on a rip and letting the calls run? Great question, Mike. And normally, in normal situations, when I put on a risk reversal, that is exactly my plan. What I like to do is when I can sell half of my calls and use those proceeds to completely cover all of my naked puts, I will do that and then let the calls run, and then it's a free ride. That's my normal situation, Mike. But in this situation, because this was a high-priced stock, I only did a one lot. I'm not ashamed to admit it. I'm a one lot Johnny on this trade, right. So I can't really do that. So I'm just going to let the naked puts just keep going. But I do have a price target. If this thing does get to 700, great. The sooner the better. And if it does, I'll just close the whole trade down. I'll get, whatever the calls I get, I'll get what I get, and the puts will probably be close to worthless, and I'll close it all down. But I have no plan personally to close the naked puts until I get out of the calls. But normally, Mike, yes, that's exactly what I would do.
Great question. And another good lesson, right? We're all on our analyst call yesterday. You're talking about the premium for some of these things. And me and JC are both like, oh God, because it's like $700,000. And what that does is it limits you, and it limits the way that you can manage the trade, right? So for me, I like to, if I get a quick double, if I'm trading short dated calls, I want to have enough so that I could sell half, maybe sell a third, right? And then kind of be a little flexible the way I scale out of the trade. Trading one of these high price stocks, a lot of the mega cap techs makes that a little more difficult. Maybe some more capital constraints there.
Another thing that I had mentioned yesterday on a little video that I made about this trade is that if this is a trade that you like, if you like the trade in theory, but the large margin requirement scares you off, or maybe you just don't have a large enough account to handle that type of margin requirement, there's another way you could play this. You could actually, instead of selling a naked put and buying a call, you could sell a put spread and buy a call spread. So what that means is, I sold the 460 put, right? Well, instead of just selling naked put, I could sell the 460 put, but then maybe purchase a 430 put below it, creating a vertical spread with the puts, right? That defines my risk, that limits my margin to, I don't know, a third of what I'm required right now. And then whatever credit I get for that, I could turn around and buy a call spread that's a little bit cheaper than what I just collected, so that I'm again bringing in net credit when I put the trade on. Buy the 700 call and sell the 720 call against it. That caps our upside. But again, it allows us to participate in a trade, still allows us to make money if we're right, or at least if we get an upward drift in Adobe without tying up a whole lot of margin. So that's a whole nother idea for people with smaller accounts or people who just aren't comfortable holding naked risk or a naked option with such a high margin requirement.
And that's why you're the options ninja. I mean, and this is why options are so beautiful, right? So many different things we could do. Gives you...
Well, you know what I say, Strazza? Options give us options.
Great. So true. All right, Spencer, are we going to do recess? Is Spencer dead? Okay.
Spencer's dead.
Yeah, we got recess. Let's do recess real fast, and then we'll hop.
10:02. We got trades to make out here. Me and Sean are trying to feed the ducks on our day trade. Look at us.
I'm making a trade right now as we speak.
What are you trading, day trader?
I'm just managing my index options position here. This is what keeps me busy throughout the day.
All right, talk to me. Give me some recess.
All right. So first up, our friends JC and Mary. We like Mary better than we like JC.
Yes.
The two of them are in Chicago right now. JC spoke at a CMT event in Chicago last night at the Chicago Board Trade, my old stomping grounds where I used to work. I had an office on the 24th floor of the Chicago Board of Trade building, looking down LaSalle Street. I miss it. It was a great spot. Anyway, I saw a picture that Mary shared in the inner office Slack this morning of the two of them sharing a drink at Ceres, which is the notorious bar on the main floor of the Chicago Board of Trade. The bar that is busy at 10 a.m. serving drinks all day long. And Mary found out the hard way, it looks like, that yes, indeed, the rumors are true. The drinks at Ceres are the strongest drinks anywhere in Chicago, perhaps anywhere in the United States. It is ridiculous. If you want, for example, and she found out, she ordered a rum and Coke. She got a rum with a shot of Coke. That's pretty much how they do it there.
Really? I never heard of this place. All right.
Oh, it's there's the picture right there. Yep. That's the rum and Coke. I promise you, that is a glass full of rum with a splash of Coke, and that's what they call a rum and Coke. That's how they do it at Ceres. It's a notoriously rough place to drink.
Wow. Yeah, there's some great pictures in the chat here.
Godspeed to Mary, who allegedly went back to Michigan last night after this drink. So, Godspeed.
Yeah. So JC's out in Chicago. He'll be back tomorrow.
Yep.
Right.
Well, hey, I don't have a recess for you guys.
Yeah, I'm gonna be out of pocket tomorrow. I'm heading to Santa Fe tonight or today actually. I'm gonna call it a half day. I got to do the options jam session in a couple hours, and once that's done, we're hitting the road to Santa Fe, New Mexico. If you need me, send me a smoke signal. That's how you'll find me tomorrow.
Enjoy, man. That sounds great. Glad you're doing that.
All right. Good to know.
Recess for me. Watch Chart Request live at 1 o'clock. Today.
I've never been to New Mexico either. So
neither have I. I'm excited. We've never been there.
Where's my?
That's at noon Eastern today.
Schedule. There it is. Options jam session at noon. CRL at 1. That'll be a wrap for us here. Thank you to our guest, Julius De Kempenaer. Thanks to John Netto. Thanks to Kimmy. Thanks to Sean. Thanks to all of you. Mary made it home safely. Excellent, Mary. Glad to hear. All right. Smash the like. Do us a solid on YouTube. We'd appreciate that. And we'll see you guys later. Go make some money, all right?
Take care, everybody.
Cool.
Go Bills.
I can't take no loss. I don't even know what it costs.